best laid plans of mice and men. Unfortunately, I could see Paul Walker on the monitor, but he couldn't hear us, and we can't hear him either. So I'm afraid we're not going to be able to cross to London, but there's a real good gold story anyway. And let's just take you through the story as it unfolds. We put together quite a lot of research for this discussion. So we'll have a look at some of the hot boards, and I think you'll be able to pick up from there what's happening in the gold market at the moment. It does look like the gold price will be reaching $1,000 an ounce apiece. That's what Paul Walker has to say, and that's what he has been saying for a while. And it does also, there are a couple of drivers that we'll be identifying in just a little while too. The gold price itself, well, if you have a look at the graph, which we're bringing up in a moment, there it is. As you can see, it's had a fantastic run this year so far, up by 17%, and certainly looks to be going a lot higher. The reasons are quite obvious. There's a weak US dollar. There's a very high oil price. Those are, I guess, related to each other. You know, with commodity markets in South Africa, commodity prices rather, very much related to the weaker US dollar. And as long as the world economy doesn't collapse, those are likely to stay there, or so the experts tell us. Also, the fears of the US recession. In Davos earlier this year, that's all the people were talking about, was the subprime crisis, which had turned into a credit crunch and turned into an issue that was putting enormous concerns all over the world, people running off, trying to get hard assets, and gold sticking out amongst them. And then a shortage of new gold supplies coming onto the market, which is also quite an interesting issue as well. South Africa this year, gold production has fallen, and fallen very sharply. We're down by 7.5%, and the South African mines now no longer the biggest gold producers in the world. The oil price with the $104 a barrel level is not where it's going to end, and certainly the Goldman Sachs believes it could go as high as $200 a barrel if circumstances permit at some point in time. In other words, if there's some jolt in the system. Gold price and the oil price have been related for years. There's been, it used to be a 12 or a 13 times relationship. That broke down a few years ago, but higher oil price means higher inflation, and inflation is one of the reasons why people buy gold as a hedge against increasing prices around the world. South Africa's power outages have been partly to blame for the reduction in the production from this country. We're down to the same level of gold production that we had here in 1920. There are hopes that it can be raised, but South Africa now very firmly only number 2 in the world, behind China, and not too far ahead of Australia and the United States. So some of those ideas about investing further into the future in this country, if they are continue to be hampered by lack of the new power supplies from Eskom, well, this country, from being the number 1 producer for nearly a century, could indeed fall into 3rd or even 4th place. The Chamber of Mines members are hoping for increasing in gold, though, and the recent increase from 90 to 95% in the Eskom allowance to gold mines might have some help in that respect. The safest place, if you want to have a bet on gold, though, is exchange-traded funds. These were only introduced in the past few years, but what they do is allow you to buy gold in a physical content through the stock market. So you don't have to hold Kruger rands anymore. You can buy exchange-traded funds. It has been an enormous success wherever it's been launched around the world, and new ETFs are on the drawing boards for Tokyo and Hong Kong. Also, it takes away the risk of what we had in South Africa with the power-affected reduction in production. Exchange-traded funds give you ownership of the physical gold themselves. GFMS itself, it's a pity we weren't able to speak with Paul Walker. It's one of the premier research consultancies in the world. A lot of the information that we've passed across to you today comes from the research that GFMS has done. Well, that's in a nutshell. We try and make the best that we can here when we do or are presented with technical difficulties. Our apologies once more for not being able to link up with London today. Hopefully we'll be able to get Paul on air at some future date. That's all from Power Lunch, brought to you in association with Moneyweb. We're crossing now to CNBC Europe for Power Lunch Europe with Louisa Boyson. CNBC Africa will be back at 4 o'clock Central African time with regional updates.